So let's go. Let's fucking go, guys. Second live stream for the day. Let's start. Let's finish this week strong, actually. As I said at the start of the last video, definitely go check. I made a video already, a live already, about my outlook for the stock market right now and the crypto market in general. So definitely go check this video after this one. This is the last video after this one. And right now we're going to talk about today's open. As I said on the other video, I expect weakness today again, to the sell-off to continue. But we want to basically hold this level at the S&P 500 chart, this level right here, this mid-cycle low right here, 40 is at 4,579. Otherwise, if we don't hold it, we're dropping even lower to 4,500. So that's what we are looking to do. When it comes to Bitcoin, I expect a small weakness again back to below 40K and then back higher. The stock futures right now look alarming, look kind of worrisome. Look at that, 0.7% down for S&P. It was even lower before. It was 1%. It was 0.9% down before, and Nasdaq was 1% down before. So weakness on the S&P, 0.7% down right now. Dow Jones 0.7% down as well, and Nasdaq 0.7% down too. So everything is 0.7% down. Russell 0.9% down. So we still see weakness on small cap stocks till this day. Even they have been so beaten down. What I'm looking to buy on this dip? I'm looking to buy quality companies, high cash flow companies, high margin companies with that I expect growth in the future, and some small cap stocks, some riskier small cap stocks, in order to diversify away from the crypto market, because my biggest positions are on the crypto market right now. But I'm also looking to buy, when it comes to crypto, Bitcoin, some ETH below 2,800 would be the ideal level, below 2,800. And some, maybe, let's see, some ADA or Solana. I don't have any Solana, so I think I would be more interested in Solana right now. But yeah, I think it's kind of up there in its price. So I don't know about that. Let me see the Solana chart. I haven't even checked the Solana chart, by the way. So yeah, we'll see what I'll buy. Let's close the Yahoo Finance here, and we'll read some articles on barons until the market opens. So what do we have here? 130. So we see a big horizontal support line at the 130 level. Look at that, 125. It even got lower here, 123, and some people bought at 129. That's interesting. And now we're trying to reverse back out of it. And the upper horizontal line of resistance is 2,244 for Solana. It was kind of overvalued there. Look at that, it almost got to 60 billion market cap or something. That's insane for Solana. Okay. When it comes to the markets, it opens in 8 minutes, so let's go back to this and maybe read some articles here. So what do we have? Boosted by investment backing, JP Morgan earnings beat expectations, but the stock is falling as trading slowed. JP Morgan's fourth quarter earnings beat expectations as the biggest US bank benefited from busy capital markets and an increase in lending, though trading activity has slowed down. The banking powerhouse posted profits of 10.4 billion in the final 3 months of 2021, on 30.3 billion to 3.33. Wall Street was expecting profits of 9.1 billion or $3.301 a share, on revenue of 29.8, based on analysts surveyed by FactSet. Okay, JP Morgan Chase reported solid results across our businesses, benefiting from capital markets activity and a pickup in lending activity, as firm-wide average loans were up 6%. Revenue in the group's investment banking division was a stand-down, up 28% from the fourth quarter. Okay. Of 2020 to 3.2 billion, driven by higher fees, unprecedented mergers and acquisitions, M&A activity, and strong performance of initial public offerings, IPOs. That was a good year for JP Morgan. You can't go wrong with that. Let's check how JPM stock is doing. It's been so long since the last time I checked JPM. I'm mostly staying away from banks and not paying any attention to them. Oh, it has reached even 170. Look at that. Oh, it has got even higher than 170. But we see a big resistance here. That's interesting. That's interesting. What happened over the last week? Last week we were up 1.8%. Let's see how the stock opens today. It will probably be in a green day. I don't know. I don't know. Some people say that banks drive the markets. I don't know about that, but yeah, many people believe in that good earnings for banks are good for the market in general. I don't know about that much, but yeah, you can draw your own conclusions. But that's for JP Morgan. Should we read the whole article? Slowdown in trading activity. Okay. Market's revenue fell 11% to 5.3. Okay. Shares in JP Morgan fell more than 3% in pre-market trading. Okay. A decline for the stock following earnings isn't unusual. JP Morgan has declined on every results day for the past 5 quarters. Oh, okay. These consistent dips have come even as profits revealed on each of those days have topped Wall Street expectations for the bank's performance. The latest results bring net income for the full year to 48.3 billion, up from 29 billion in 2020. But the quarterly figures mark a decline from the same period in the prior year. Let me prepare some coffee here, maybe. I think you can hear me. I hit the I hit the mic so far away from me. For no one button in eye. Let me check if the last video is working, because I had the mic so far away. Let's see my Outlook. Oh my god, man, this mic so good. I really hit the mic. Look at that. Look at where it is now. Look where it is now. On the last video, I literally had it over here, like far away from me, and now. But you can still hear me clearly on the last video, so definitely go check the last video too. So I'm adjusting the screen back. Maybe let's go to CNBC so we can watch a video. Let's finish with this article and then we can go to CNBC, maybe watch a video there so I can make my coffee. The lower profits in the latest quarter compared with a year ago can in part be attributed to a smaller release of loan loss reserves in the recent quarter. Okay, JP Morgan injected 2.9 billion of credit reserves into earnings in Q4 2020 and 1.8 billion in Q4 2021. Reserve releases are also expected to continue slowing. However, net interest income was higher in the quarter and ahead of expectations. This is a fundamental measure of banks' profitability, marking the difference between interest income and expenses. Wall Street was looking for quarterly net interest income of 13.1 billion. JP Morgan delivered 13.7 billion, up 3% from a year ago. That's nice. Look at that, let's see that. That's from December 16th. S&P is flat, is 0.2% down, and JP Morgan is up 5%. Maybe that's because of the interest rates rising. KBW Nasdaq Bank Index, what is that? First time I hear about that. Okay, banking on it. JP Morgan and its peers have been on a tear over the past month, outperforming the S&P 500. Investors see higher interest rates ahead as boon for bank stocks. I really like that. Certain major banks have been on a tear amid, okay? The economy continues to do quite well despite headwinds related to the Omicron variant, Diamond said, and supply chain bottlenecks. We remain optimistic on US economic growth as business sentiment is upbeat and consumers are benefiting from job and wage growth. So, this plays a big role on the market sentiment. What the CEO of the biggest US bank thinks plays a big role on the market sentiment. And it's not bad seeing him optimistic, or at least seeing him say he's optimistic. The Federal Reserve agrees with Diamond about a strong US economy and is winding down pandemic-era stimulus and setting out to normalize financial conditions, including raising interest rates. Tighter Fed policy, along with higher inflation, has lifted bond yields and steepened the yield curve, which refers to a greater difference between short-term and long-term bond yields. Higher yields or interest rates are good for banks because it gives them wider margins and thus bigger profits when lending money. Banks charge more for loans than what they receive for their deposits, so margins come under pressure in an ultra-low rate environment. Loan growth was also in focus in JP Morgan's release, with lending rising across the group, even though average loans in consumer and community banking fell 1%. Businesses and households have borrowed less than usual during the past year as the pandemic left many flush with cash. Okay, boring article. Let's go to Wells Fargo ahead. Easily top estimates. The stock is rising. So Wells Fargo beat its estimates as well. I really like the name Wells Fargo, man. I don't know why. Profits, San Francisco-based bank were 5.75 billion or 138 a cent, well ahead of the 4.5 or 111 a share forecast by analysts. Results from the fourth quarter marked a huge increase from last year when the bank earned 66 cents. That's nice for Wells Fargo, that's good. The bank's return on equity and measured profitability nearly doubled to 12.8% up from 6.6. I wonder how those stocks will do over this year, starting the year that strong. Usually companies like to set the bar low starting the year so they can have even better earnings throughout the year. But yeah, that's interesting. Let's go here. JP Morgan shares pulled back 4% after CFO lowers guidance on headwinds, including wage inflation. Okay. Dogecoin jumps 9% after Elon Musk says it can be used to buy Tesla merchandise. Google expands London property empire with 1 billion office purchase. That's nice. London Empire. That's nice. One of the world's biggest offshore wind farms gears up. Okay, while retail investing has taken off in the US but not Europe. Oh, we have a video here too. Robinhood. Australia cancels Novak Djokovic's visa for the second time. This was an interesting story. I heard about that the last day. Let's watch that even too, if there is anything interesting there. Queen Elizabeth apologized, Johnson's office apologized to Queen Elizabeth for party on eve of funeral. Okay, stocks and property will be turning into NFTs, venture capitalist says. Oh my god, man. But despite that, I can really imagine the market, like, oh, the stock market open. That's the sound of prices dropping. Ooh, okay. Traders 77.75, SoFi $13 per share, Honest 6.8. So I'm buying some. TDCF 14. Okay, we're starting the day strong. I'm buying some of from the stocks. $5 on SoFi. Still start the day slowly. Honest, buying some Honest as well. Since they start the day here, they will probably drop more throughout the day. So that's one thing to keep in mind. Let's see where we are standing right now in my average prices. Let's buy some more. Actually, let's wait for it to reload and we'll buy some more later. Tesla about to drop below 1,000. Interesting. Say 2,754. Google, let's buy $5 in Google here. It's okay. Alibaba trying to recover. Apple 172. Amazon. I'm getting into Amazon every day, so that's good. Did my Amazon buy went up in? Let's see. No, it's going in. So Amazon 3,200. Costco. I mean, let's make a list of quality companies. If in case we have a crash or the sell-off really continues, let's make a list about quality companies that we would like to hold in our portfolios for the long run, right? Let's see. I mean, Google is one, of course. Google is like the blue chip, the tip of the spear of ads, online ads, and its revenue system. So we have Google, quality companies. Let's see. Let's make a list together. Quality companies. We have Google here. When it comes to Google, anything below 2,700 is very well priced. Look at that, according to my technical analysis. So very well priced. If we go below 2,600, then we're looking for a drop even lower. That would be scary. But anything below 2,700 is a good buy for the long run. So let's type Google below 2,600. We'll even type prices here. Alibaba. Chinese stock, it's not for everyone. It's not for the faint-hearted, but I like that stock. 130, anything below 150 is good for the stock. It's good for the stock because of its price to earnings, because of its growth in the future. It's just beaten down because it's a Chinese stock right now. This stock was like $320 per share a while ago, and the company has gotten better since then, not worse. That's one thing to keep in mind. Amazon is definitely a stock to own. Apple, but it's too overvalued here, so we won't even put a price on that one. Amazon, look at that. Amazon is in this huge accumulation period. Look at where it goes all the way from, that's a 1 hour chart. Let's go to the 1 day maybe. It goes all the way from 3,750 to 2,850. Look at that. And anytime it's below the middle, anytime we are from 3200 and below, it's a good time to buy. So I'll buy Amazon even heavier below 3100. That's a price I put on my list here. So until now we have Google, Alibaba, Amazon. Let's see if the live is working, if everything is going well. Okay, everything is going well. I'm alone here, I'm just making my own list. It's okay. Apple 171. Then Costco. Costco is another interesting stock that a lot of people like to own. I played with Costco a bit. I don't even remember the price that I purchased. 4,800, or not 4,800, 480, 490, somewhere around there. I bought for the first time, and the stock kept on rallying. The stock kept on rallying, and I sold at 540 and 550. Took some profits there. This was the prices where I took some profits. But I called a lot of times that it's extremely overvalued, and it should come down. It should come down, and that's where we are right now. When it comes to Costco, I might buy. It's still at the highest historical P that it ever had, so that's kind of worrisome for me. But I would like to buy Costco below 480. So that's for Costco. Microsoft, I'm not a big fan of Microsoft, but let's check the chart anyway. Those look kinda similar. Costco and Microsoft look kinda similar. Microsoft and Google also look kinda similar. Interesting. Facebook is in huge accumulation period as well. Nvidia 265. Let's see. Honest dropping more, man. Look at that. 670 for Honest. That's insane. Let's buy even more Honest. Tattooed Chef 1385. That's insane for Tattooed Chef as well. The fact that we're still spending time here is insane. So yeah, that's for now. Oh, the stock is rising from 1385. Let's buy some more. Just averaging into this slowly but surely. Hood. I'm not looking to build Hood even more because I already have a big position in Hood. What other companies would like to own? So we have Google, Baba, Amazon, Costco, Nvidia. Like I like this ETF that I have. I'm buying this. I'm buying some of this one. Let's see, €5 here. Slowly DCing into this one as well. This SMH ETF has to do with semiconductors, with chip stocks, so it's a good one. It's a good one to hold for the long run, just so you know. SMH, let me type that one in. So we have already here like 4 stocks and 1 ETF. SMH below 25 is a great deal. Below 25 is a great deal. Let's see. MicroStrategy is a great company as well. Below 450. MSTR, let's see. MSTR below 450 is a treat as well. Nancy Pelosi pie. Oh, Disney dropping. Ooh, why is Disney dropping today? 3% down. Look at that. Look at this gap. To end, that was 144. I want to buy Disney at 145. That will be good. So let's put a price target here in case it drops more. We might increase our position here or start a position there. 145. Pepsi 173. Monster 93. I'm not looking to buy into those 170. Pepsi is kind of overvalued here, but it's Pepsi, so that's understandable. Mondelez stuck at 67, creating a new resistance where if we get rejected again, we might drop back to 65, 55. That's for Mondelez. When it comes to Chipotle, we're on this huge downtrend, it looks like. Look at that, huge downtrend. On the weekly, it will be even more visible. Okay, it's not that visible, but yeah, we have a huge red candle here. Okay, let's go back to the candlesticks. Foot Locker is stuck at 42. So far 1327. Oh, we see some recovery from the stocks. That's nice. Let me buy some more Honest. You can't go wrong buying Honest here, man. I'm calling it. I like Honest at these prices a lot. So that's for that one. The SMA TDF is rising as well. We see big volatility in the market right now. Google trying to recover. We see most stocks trying to recover, trying to hold, but I think they will turn redder They will turn more red throughout the day, so that's one thing to keep in mind as well. That's for now. Nothing else that interesting. I'm kind of tired to read the articles that we opened earlier right now. Maybe, let me see, JP Morgan shares pullback. We read the story about JP Morgan already. The price of Dogecoin jumped more than 50% on Friday before powering gains after Tesla began accepting the cryptocurrency as payment for merchandise. Only a small number of items, including a belt buckle and a whistle, were buyable with the cryptocurrency, which originally started life as a joke coin. There are numbers of conditions that come with paying with Dogecoin, including no refunds or cancellations. Okay. That's not made buyable with Dogecoin. No returns with Dogecoin. Okay. Google expands London property. Do we have a video about this story? No, we don't. I will read this one though. What is this? It looks nice though. Google's new London headquarters. Wow. Look at that. It's almost like a cruise ship with a small jungle and small forest on the top. This looks good, man. This looks good. Props to Google for this building. This is how it looks like from the side or something. Yeah, probably. Or not. The central St. Giles building in London. I want a video, man. I want to watch a video. Let's see. Let's watch this one.
Investors can be split in two main categories, institutional and retail. Institutional investors can be likened to wholesalers buying flowers in bulk from farmers. They spend money on behalf of their clients and tend to make large-scale investments. It's their full-time job. That's a lot of flowers. Retail investors are more like me, buying a bouquet of tulips with my own money. Their purchases are smaller and typically require a middleman, like a florist. Thanks. And just like online flower delivery companies have made getting your bouquets easier, platforms like Robinhood have made markets more accessible than ever.
I heard that there was zero commission trades, and I thought, okay, that's awesome. Then I can trade more frequently and not feel bad about it.
Trading activity from retail investors has skyrocketed as a result. But in Europe, the number of people buying and selling shares remains very low.
Many of the states in continental Europe are built upon a statutory pension system, which is, frankly speaking, 100 years old. And so there would not be any promotion of private retail ownership of stock markets in society, right? So basically Europe is missing 10, 20 years of that culture.
So why is this? And with technology changing the way we trade, could European retail investing finally bloom? To understand why retail investing isn't very big in Europe, it helps to look at why it is big in the US. American households own $38 trillion worth of equities, either directly or indirectly. That's nearly 60% of the entire US equity market.
Christian, it's great to finally speak with you face to face, almost.
Christian Hacker is the co-founder of Trade Republic, an online broker based in Germany.
Why do you think U.S. players have struggled to build up a presence in Europe in the past?
Well, I think the US market and the European market are structurally very different, especially due to the lack of the 401k structure in Europe.
Unlike a traditional pension, which guarantees you a certain income in retirement, a 401k depends on the contributions you make throughout your career. With a 401k, you choose your own investments, and your account balance fluctuates based on market gains or losses. That means the responsibility falls with the individual rather than the state.
So in the US, there aren't many sort of social welfare apparatuses in place anyway, so it's sort of like the onus is on you to invest for your retirement.
With no 401ks to encourage individuals to invest for themselves in the EU, savers have little direct interaction with stock markets. Instead, statutory or state pensions are more common, leaving investment decisions to governments or large financial institutions. But there are other factors at play as well.
There is a perception, perhaps, from the retail investors that access to capital markets is difficult and probably reserved only to wealthy people. So there is a change of perception which is needed,
By the way, I'm from Greece, as you know. The last year, I say 1 year, now it was huge. I think we have seen probably the biggest, basically, not exodus, the opposite, basically entrance of retail investors into the market, Greek retail investors. So it has, I would say it grew by at least 2 or 3x, or what would, more, probably even more, because it's huge. A boom of retail investors joining the markets, investing in US stocks, US equities, and of course crypto. And it's still ongoing right now. I think despite the market circumstances right now, we still have people coming in. It's insane. I mean, I have my sister the other day. I told her to start investing in Bitcoin, etc., Ethereum maybe, and they were like, "Oh, Shiba will go to 1," or insane. Look, they were talking about shitcoins. That's one thing that draws people in, but yeah, that usually shitcoins don't keep them for the long run, and you want to invest for the long run, not try to get rich in like 1 week.
Bassi is a top official for the European Commission's Financial Services Unit.
The main issue is about trust. And the best way to build trust is to set up rules which are flexible enough in a way, but also which protect the investors and make the investors feel protected.
Europe has seen retail investor participation double since 2020, but it's still lagging behind other parts of the world. One piece of research estimates that retail activity makes up only 5 to 7% of total trading, double since 2020. Europe has seen retail investor participation double.
I think retail investor participation in Greece probably has quadrupled or more, man, over 2020 and 2021.
Since 2020, but it's still lagging behind other parts of the world. One piece of research estimates that retail activity makes up only 5 to 7% of total trading volume in Europe, compared to over 25% in the US and over 60% in China. Despite that, there is a slew of startups in Europe trying to take advantage of growing interest. They include Revolut, Trading 212, Free Trade, and Trade Republic. These new trading applications typically offer zero commission investing and include gamified features to encourage participation as well. I spoke to Eric Liu, an analyst at Vanda Research, who tracks U.S. retail trading activity.
We're kind of at the crossroads in Europe, and so you've seen a number of very successful kind of smaller companies attempt to do what Robinhood has done here in the U.S.
What's driven the boom in your view?
In Europe, many people have realized that the statutory pension system of the state is not working anymore, right? And so they face a massive pension gap. And they figured that participating in capital markets is really one source to solve the problem. And so we have seen millions of people to entering capital markets for the very first time in their lives.
So could this be the catalyst Europe has been waiting for? Are we going to see a boom in retail investing?
It is a very complex and interesting issue. The digital transformation is certainly a very positive element of the effort that we are doing to try to make the retail investor close to capital markets. On the other hand, of course, it's a phenomenon in general which needs to be kept a little bit under control.
Among the risks policymakers and regulators are most concerned with are those associated with payment for order flow, something the European Commission is planning to ban. Payment for order flow is what makes trading on platforms like Robinhood free. Back in the day, I couldn't buy stocks off.
By the way, S&P right now looks flat, only 0.1% down. So futures have turned to the market being kind of positive, which I find unusual because we mostly see on Fridays the best prices and the biggest dips on Fridays. That's how you know on historical data. Dow Jones right now 0.6% down and Nasdaq 0.2% up. Oh, okay, an update. 0.2% down for S&P, 0.7% down for Dow Jones, and Nasdaq is 0.2% up.
An app. I had to make a call to my broker, who would then call the stock exchange to make the trade for me. The broker charged a hefty fee for the privilege. Now when you buy stocks on one of these new free trading services, they send your purchase on to another company that makes the trade actually happen. This middleman company, called a market maker, needs both buyers and sellers in order to make their business model work. That's why they pay companies like Robinhood for your trades, hence the term payment for order flow.
Payment for order flow has been in the market for a very long time. It's used by big banks and by insurances alike. And it's really the driving force by lowering commission fees, which is especially empowering low-income families to trade for reasonable costs.
This model makes trading cheap. It makes it easy. But regulators argue it's also risky and doesn't have the interests of retail traders at heart. These risks include potential conflicts of interest when a trading platform routes an order to a middleman for their own benefit, or when a market maker doesn't offer the best price for a trade.
The policymakers have to try and find the right balance between, on the one hand, flexibility and encouragement in promoting all the new tools and instruments and trends, which of course help to reduce costs, help to make people more attracted and more interested in investing. But on the other hand, we should not underestimate the risks that this entails, and investors should be fully informed about those risks.
For many people, financial products and services remain complex. In fact, what is the stock market is the most common FAQ page visited by Robinhood investors. So if Europe bans the payment for order flow model, is it possible for a platform like Robinhood to exist in Europe? And if not, is retail investing on the continent here to stay?
This is a trend which will have no comeback. It's like social medias. Once this is open, the Pandora box is open, then you won't get back.
I think they're here to stay. Like, I basically intend to continue, investing all my discretionary income in the market in some capacity.
In terms of the importance of retail investors over the past year and a half, that's not going to change. And I think the cat's out the hat. And at this point, I think everyone is going to need to follow retail investors going forward.
That was a nice video, by the way. That wasn't bad. Let's listen to this story from tennis star Novak Djokovic. Here, that's already our day. And we'll finish today's live stream with Google expands loan on property. Do we have a video here? Oh no. Let's read that. Tennis star Novak Djokovic is back on the court after an Australian judge revoked his visa cancellation. He has been released from detention and will be given back his passport and other belongings. That's insane. Within hours of the ruling, he was back on the tennis court training for the Australian Open. Djokovic was detained in an immigration facility in Australia last week. Officials there said he violated the country's strict entry rules. Djokovic, a vocal vaccine skeptic, has not been vaccinated for COVID. And Australia is very negative when it comes to that. Australia requires visitors to be vaccinated against COVID to enter. I cringe. Djokovic had a medical exemption provided by a doctor in his visa preparation. He was detained when customs officials decided it wasn't sufficient medical justification. Then a judge said the Australian government didn't give Djokovic and his team enough time to react after cancelling his visa. The story sparked, and I like that. Our government is a disgrace. Most governments right now around the world are a disgrace. The story sparked more intense debate over vaccine requirements. I wonder what you think, guys, about this one, especially those of you that might be from Australia, if there is anyone. Australia has had one of the longest and strictest lockdowns in the world. The case infuriated Djokovic's fans. Many Australians bristled at the idea of a millionaire tennis player being able to get around the country's laws. Australia's immigration ministers can still step in and cancel Djokovic's visa. Disgusting. If the minister decides to do so, Djokovic could face a renewed court fight. And potentially a 3-year ban from playing tennis in Australia. I can't imagine being a professional athlete against the vaccines right now, with the Nazis that we have governing us. Anyway, hope Google didn't hear about that one. Let's read this story about Google right now. Back to good news. Google expands loan on property empire with $1 billion office purchase. The internet giant announced Friday that it has acquired all of the central St. Giles building, where it already occupies a number of floors. Our investments in this striking Renzo Piano design development represents our continued confidence in the office as a place for in-person collaboration and connection. Vice President and MD of Google UK in Ireland in a blog post. Google's main UK hub is in the recently gentrified King's Cross neighborhood on the northern fringe of the city centre. The company has snapped up several offices in the area, but its main UK headquarters is still under construction. Nice. Anything else interesting? Scrapped by... okay, the initial 1 billion plans drawn up were reportedly scrapped by Google co-founder for being too boring. Okay. A source familiar with the build, who did not want to be named due to the sensitive nature of the project, told CNBC last April that Google is aiming to be in by 2023-2024, marking a delay of almost a decade. Oh, okay. Other Google's buildings. Yeah, that's all. That's all for today's live stream, guys. I'm kind of tired to read the stories right now. City groups, yeah, no one cares about banks anymore. Stock slippers, banks report big banks report earnings. Dogecoin soars and what else is happening in the stock market today? Okay, we saw what happened. Earnings season is here in the earnings. Beware of the guidance. The big US banks kick things off, including Citigroup, JP Morgan, and Wells Fargo. The floodgates will open next week with Goldman Sachs, Bank of America, Morgan Stanley, Procter & Gamble, United Airlines, and Netflix among this reporting. What is this? Okay, that was a quick story. So this is the article that we might leave for basically the second part of the day, maybe, or tomorrow. Anyway, that's all for today's live stream. That's all for now. Thank you guys for joining me, if you joined me, and I'll see you on the next one. Definitely